Being poor is more expensive than being rich, and the numbers show it. What if the poorest people in this country pay more tax than almost anyone else, and nobody ever votes on it? There's no line for it on a paycheck, no official name, no form to fill out every April. But it drains more money from poor families every single year than most taxes you've actually heard of. And almost nobody ever talks about it, because on paper, it doesn't even exist. Think about your bank account for a second. You probably never think about it at all. Your paycheck lands there automatically, withdrawals are free, nothing about it feels like a cost. But for millions of people, banking isn't free at all. Every deposit costs something. Every check costs something. Every small emergency costs real money. The less you have, the more the system quietly charges you just to survive. That's not an accident. It's built into how modern money actually works, layer by layer, fee by fee, invisible from the outside. And once you start looking for it, you start seeing it absolutely everywhere.
Start with something as basic as owning a bank account. In the most recent national survey, 96% of American households had one. That sounds like almost everyone. But that remaining sliver is still millions of families. And without a bank, cashing your own paycheck can cost you money. Check cashing stores charge a fee just to hand you money you already earned. Money orders cost money to even buy. Prepaid cards charge you to load them, charge you to spend from them, sometimes charge you just to check the balance. None of this ever touches someone with an ordinary checking account, sitting quietly online, moving money for free. None of it shows up in headlines either. Researchers gave this pattern a name decades ago, back in the 1960s. They called it, simply, the poor pay more. What nobody expected is that skipping a bank account is almost always the more expensive choice, not the cheaper one.
The same pattern shows up again at the grocery store. Millions of Americans live nowhere near a real supermarket. Their nearest option is a corner store or a gas station counter. Prices there run higher on the exact same staple goods. Choices run smaller, and fresh food is often nowhere to be found at all. So a family already stretched thin ends up paying more for less, simply because of where they happen to live. It isn't written anywhere as official policy. Nobody designed it on purpose, in any meeting, on any form. A gallon of milk, a bag of rice, a box of diapers, all quietly cost more week after week in exactly the places where people can least afford it. What nobody expected is that this quiet grocery penalty adds up faster than almost any single bill in the house. Here's where it gets stranger. Lottery tickets look completely voluntary. Nobody forces anyone to buy one. But look closely at who actually buys them. Households in the poorest zip codes in America spend close to 5% of their income on lottery tickets every single year. Households in the richest zip codes spend about 0.15%. Run the math, and the poorest families are spending 33 times more of their income chasing the exact same jackpot. State governments call this revenue. It quietly funds roads and it funds schools. Researchers call it something else entirely, a tax that only the poor choose to volunteer for. What nobody expected is that for every 10% drop in a neighborhood's income, lottery spending there climbs another 4%. Now add borrowing to the picture. If your paycheck runs out before the month does, a regular bank usually says no to a small loan. Payday lenders say yes, almost instantly, no questions asked. But the price is brutal. A typical payday loan carries an interest rate close to 400% a year. In some states, it climbs past 600%. Borrow $200 to cover rent, and within weeks, you can owe hundreds more on top. It gets marketed as a quick, friendly lifeline. A bright storefront, a simple form, cash in your hand within minutes. For countless families, it quietly becomes a trap that resets every single payday. Pay it off, and you're short again by the next one. Borrow again, and the cycle simply repeats itself. What nobody expected is that this isn't some rare, desperate, last resort choice. Millions of people use it every single year.
simply because it's the only door still open to them.
Now flip the picture completely, because the contrast is almost unbelievable. While poor families lose real cash to fees, the richest people in the country grow enormous wealth that barely gets touched. One investigation looked at the 25 richest Americans over several years. Their combined wealth grew by roughly $400 billion. The federal income tax they paid equaled just 3.4% of that growth. Not because of some secret loophole, because most of that wealth was never technically called income at all. So one group pays real cash immediately for being a little short one afternoon. The other group grows dramatically richer year after year, while owing almost nothing on paper, because unrealized gains simply aren't counted as income until someone chooses to sell. What nobody expected is that both of these outcomes are perfectly, completely legal, every single day in the same country under the exact same tax code. Save the biggest number for last. Look closely at overdraft fees on ordinary checking accounts, the kind almost everyone already owns. Just 18% of account holders pay 91% of every overdraft fee charged in this entire country. Almost all of them earn less than $50,000 a year. On average, these heavy overdrafters hand over nearly 1 full week of their yearly income in fees alone, every single year. 1 entire week of work, gone. Not spent on rent, not spent on food. Gone to a fee for being a few dollars short at exactly the wrong moment. That's the number people forget the fastest, and it's probably the one you repeat to someone tonight.
Now, notice the pattern running through every single story tonight. A missing bank account, a neighborhood with no real grocery store, a lottery ticket bought on a hard week, a payday loan taken out of pure necessity, a checking account just a few dollars short at exactly the wrong moment. None of these are really stories about bad decisions. They're stories about a system quietly built to charge the most to the people who already have the least, over and over again. Call it bad luck if that feels easier. But luck doesn't explain a pattern this consistent, repeated across an entire country, city after city, year after year, decade after decade.
None of this is written into law as an actual tax. No politician anywhere ever votes on it directly. Nobody signs it, nobody announces it, nobody explains it to you in school. But being poor comes with its own invisible price tag, charged one small fee at a time, every single week of the year, quietly, in the background, while everyone pretends the system is simply neutral. So here's the real question worth sitting with tonight. If this system already exists quietly, whose job is it to actually fix it? Comment below. Have you ever paid a fee like this just for having too little money at exactly the wrong moment?